Hey everyone, this is Chi from WX Capital. Today we have a really special video for you. We're going to walk through 4 key factors that will help you invest in case of a second COVID outbreak. This is based on our very first investment fund in which we made over 60% returns in 2 months. So let's dive into the 4 factors, and this is going to really help you guys figure out which stocks to pick in case there's another market drop due to a second round of COVID outbreak. The first factor you should always consider when investing in companies during an economic downturn is debt maturities. So what debt maturities are is a timeline or a time frame of when a company needs to pay its debt. You want to be looking for debt maturities that are within 1 year or so for the COVID outbreak, since COVID is more of a short-term impact on a company's performance. If there are significant debt maturities coming up that the company has to pay, this is a big red flag, because more often than not, because the company is going to have lower sales than average, they're going to struggle to meet those debt maturities or debt obligations. The second most important factor when evaluating companies during the second COVID outbreak is going to be cash position. You can find the cash and cash equivalents position on any company's annual report or quarterly report. Optimally, the cash and cash equivalents should be much greater than the debt maturities that are coming up in the next year. The reason why this is so important is because companies that struggle to meet up with their debt maturities are much more likely to file for bankruptcy. And if a company has demonstrated a strong cash position during a time when revenue and sales are going to be much lower than average, this means they have enough money to ride out the COVID crisis and ride out a potential second quarantine. The third most important factor to consider when investing in companies during another COVID outbreak is going to have to be industry impact. Clearly, COVID impacts certain industries more than others. For example, the hotels and airlines industry was greatly impacted, while the biotech did have a slight impact but recovered much more quickly. So with a hotel and airlines industry, you're really going to have to look into those first 2 factors because they're going to be much more important: cash and debt maturities. If hotels and airlines don't have the cash to cover their upcoming debt maturities, they're in big trouble and risk of bankruptcy. However, if you do find some hotels or airlines that have been hit really hard in terms of their stock price and they have the cash to cover debt maturities, then go for it. But keep in mind, these more at-risk industries like hotels and airlines should always be a smaller portion of your portfolio as compared to biotech right now, which is really not impacted by COVID because discretionary spending is not that relevant for biotech industry. The fourth and final most important factor for assessing companies when you're investing in another COVID outbreak is going to have to be risk management. Every company impacted by COVID is fair game, whether that ranges from risky investments such as airlines and hotels to less risky investments such as biotech. You just have to make sure you're managing your risk and your portfolio correctly. For example, if you're a low risk person, definitely stay away from those hotels and airline stocks because their share price is really going to swing. They're going to go up 15% one day and down 15-20% the next day. If you can't tolerate those kinds of swings, I would recommend staying away from it. On the other hand, if your risk tolerance is much higher, then you can allocate more of your portfolio to those riskier stocks. At the end of the day though, biotech during economic downturns has been shown to perform better than broad economic recovery such as the S&P 500. So those are always safe bets during a time of economic distress. Thank you guys for joining us today as we discuss 4 critical factors that you have to consider when assessing companies for another COVID outbreak. So just to remind everyone, the very first one is going to have to be debt maturities. Number 2 is going to be cash positions or cash and cash equivalents. The third factor is going to have to be industry impact. The fourth most important factor is going to have to be risk management. I hope this video helped you guys assess companies in case there's another COVID outbreak. There are definitely great companies that are trading at a discount, and if you get in on them, they can be, quick returns or even long-term holds. Either way, this is a time of opportunity for good companies that's going to ride out the COVID outbreak. If you guys liked our video, don't forget to like, comment, and subscribe. Also, check out our website at www.wx.capital. We have a great subscription service that allows you to get real-time trades as well as market commentary, so you know exactly what's going on with stocks and you know exactly what we're trading and what the next hot stock pick is. See you guys around.